Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Sunday, May 31st. The year is 2020. Let's talk trading. It's time for the weekly open and gap, and it's the monthly open. Yes, it's still May where I am, but where the markets are open, it is June. So it's time for the monthly open. Remember, fellow traders, these videos are for educational purposes only. Your results may differ from mine. Trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. Always have your money and risk management in place. Never lose any more than you're willing to lose on a single trade. Money management, make sure you take those pips when you can. Otherwise, the market just might take them back. And brain management or self-management, none of these you can't do any of these. And just remember, when you're in a trade and you're feeling pain, it's not the market. That's your reaction to the market. So, how are we doing so far this week? Well, you can see we've only got, what, 1, 2, 3 gaps that haven't filled. The pound filled its gap, it gapped down, and it moved right up. In fact, it even broke the weekly high. And on the daily, you can see here, it moved up nicely. So far this month, we're up 70 pips from 69, 70 pips from the open. $984 pips off the yearly low and 872 off the high. But you can see where the yearly open is way up here. Once again, on the daily chart, you can see we popped above the previous day's high. There's an inside bar 2 days ago, along at 123.44. You'd be up 49 at the moment. These inside bars in the daily, weekly, monthly, once again, these videos are for educational purposes only. But those traders out there that are trading these horizontal line breaks, they are bringing home the pips. So far, the day is only about a little over 6 hours old, according to my broker. And you can see we've got 4 pairs over 100 with the pound clocking in at 91. Since it's a new month, I'm not sure if I'm going to switch over to a different pair or if I'm going to keep trading the pound. I've been having some success with the pound because I've been trading with Walmart and he likes the pound. It works good on his platform. Okay, the buy zone, we opened below the pivot. So there was a long bias. You can see here in the buy zone, took out the pivot on the very first hour. Since we opened below the close there of the previous week, it was all the signals were definitely long on the pound. And you can see here we're now pulling out of the rat zone off the top. Speaking of the rat zone, here we go again. You can see the short trigger for looks like actually it looks like the smart rat zone is actually bigger than the normal rat zone. Isn't that interesting? And that's not a mistake because this is being calculated dynamically, meaning it's going to be looking at the last, I believe I've got this set for 250 bars. Smart rat zone here. That's a donation, TRO 2020. 250 bars. That's 50 weeks of trading right there. And it's on the daily. So it's looking at those two calculations, high minus close and close minus low. And it's saying at the 20 percentile, this is where it is. But since the rat also has the on the close line right here, not close as in what you wear, but close as in price close, you can see the high minus the close and the close minus the low. And right now, we're at that 20 percentile range. But here on the close minus low, we're at the 71 percentile. So obviously, this is about the time where if you go short here, you still have good chance of making money. But once again, these videos are for educational purposes only, and your results may differ from mine. We saw we took out that pivot, weekly pivot 123.01. Let's see if the pound hits that this week. Remember, I called it. And so daily missed pivots, we had one in May, and that was right here, I believe. No, here's the May one. This is a March one. And you see there's that big gap that needs to be filled too. As far as the weekly pivot, this is the current week, and 4 weeks ago we missed it. So maybe one of those pivots gets taken out this week. We'll just have to wait and see. Now, there were some traders, still asking about mentoring and still needing help. And I always say it's not what you trade, it's how you trade it. It's really so true. And the reason I know it's true is I can show some people a method and they catch on, they make money. I showed other people the same method. They could be sitting here getting the same information at the same time and they don't make money. So you have to ask yourself, why is that? Why aren't you making money on the method you're choosing? What is it you're not doing properly? Don't blame it on the method. And you can see here, like the wick zone, came into the wick zone and out of the wick zone. I mean, once again, these systems are we're just putting horizontal lines on the chart in different places. I mean, I've even shown you with the Einstein line, you can just put it relative to when you open your platform and trade from that line. Always trade away from the Einstein line. So here with the Walmart method, you can see here there was a short trigger here, and right now probably good for about 6 to 8 pips, looks like. Let's see, where was this low? 91. Yes, so you could probably picked up 7 pips. And tell you the truth, fellow traders, I'm kicking myself because I had a short and I was targeting to get out around 93.95, but the way price was bouncing around here, I jumped out around what was it, 98 or 99. Actually, it was bouncing around here. So as soon as it happens more often than not. As soon as I jumped out of the trade, it just dropped like 3 or 4 pips, and I just laughed because it's like I've seen it happen before. But you have to trade in the moment, and you never know what's going to happen next. And as you can see here, this was a green candle, and then all of a sudden it just got slammed right back down. But the thing is, so long as you're making money, just keep doing what you're doing. Don't try to be greedy. In fact, there's some traders out there. I was reading on some other trading forums where they say if they get in a trade and that level doesn't hold, they're out somewhere between 1 and 2 pips. But some of these guys are trading 100 lots. They're trading $1,000 a pip, and they're only gaming for 1 to 5 pips. Some of these guys, I mean, they are super precise scalpers. They are in and out as quick as can be. I mean, think about it. If you had $1,000 per pip on the line, what would your heart rate look like? And you see here, this would be one of those trades that could have really washed you out. It spiked up to 94, and then look what's happening. Now it clicked right below the 90. So it took out some of the people right here, and now price continues to go down. And it took me out up here, so had I left that trade alone, oh, I won't even tell you. Won't even tell you, but that's okay because I made my percent for the day already. And once again, to simplify things, candle color at the line. I mean, if you look at it, if you look at these trades here, green at the line, long, green at the line, long, red at the line, short, no trade, green at the line, long, green at the line, you know, right here, green at the line because it went up, came back down, red at the line. I really don't know how else to explain what I do. These trades, most of them are, you know, based on statistics, frequency distributions, and on the range and how price is moving. We do range per hour. We do, you know, what's the you know, most likely size of an M5 bar, an H1 bar. That's what most of those indicators are, right? Are statistics. Like right here, we've got the range. This is the regular range, high minus low. This candle 15, the last candle 11. And so we can see here, but we also know another indicator I wrote per hour. You know, which hours break 13? We just like that number 13, not because it's unlucky, but because if you've got a 10 pips between these lines here, 13 doesn't fit into 10. So hopefully, if it cracks one side, you can get 3 or more pips. And once again, we talked about trading for minimum wage. If you're trading $10 a pip and you get 3 pips, you just made 30 bucks. If you do that in an hour, are you happy making 30 bucks an hour? Would you work a job for 30 bucks an hour? 30 bucks an hour is like a $60,000 a year job. Okay? So if you can sit here and you've got the guts to trade 10 bucks a pip, that's just one lot. You don't have to be making minimum wage when you're trading. Now, if you're in $1,000 account, you know, with the right leverage, you can do $10 a pip. Now, a lot of people say the risk is too high. Well, maybe for them it is. But if you want to have, you know, extraordinary returns, you're going to have to do something extraordinary. You can't follow the crowd. You can't really play it safe. Because if you do, you're going to sit there and trade for $1 a pip, and you're going to be trading for probably less than minimum wage. So it's just something really to consider. Um, and if you don't have the stomach for it, well, then you just don't. There's nothing else I can say. But I mean, on some of my trades, I can be down a bunch. Now I'm kicking myself. I'll just let you know because right now, from where I got out, that's about another 10 pips in my pocket I could have had. And I could have probably doubled my percent return on the day. And here we go, looking at the dragon chart on the M5. One thing that you do on these, see this 3 ball right here? Well, the candle was green when it made that 3. Then it turned red. And when it turned red, it's purple on Dragon's chart. And see it opened below that mid dot right there? That was a short trigger. And you can see just follow those mid dots. And if you're wondering what I'm talking about, it's the TRO mid dots right here. And the only one I have is the previous middle. And you can see, you just follow those mid dots. So long as it closes below the mid dot, stay in the trade. And the hardest one is always the first one. You enter that trade, you see here you would have taken a little heat. And then here, it's right there, no heat, no heat. There, just a look, but see, you're in profit, so it's no heat at all. And you just stay in that trade. If you can follow the dots, then the dots will take you to profit. Here on the other side, you see here, it opened above that mid dot. You just stay in that trade, and right there it closed below, opened below, you're out. And so, yeah, you gave back a few pips, but you took the lion's share. So, fellow traders, I hope you have a profitable June. Just remember, it's not what you trade, it's how you trade it. So go out there and drain the banks and subscribe.